Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. It seems that we have come to an end of this year 2023 and it's good to see that markets are closing on a positive note this year, pretty much into positive territory. But the next year, what markets are going to bring for us, we need to be very much aware of it. So watch this video till the last moment. And the main reason for that is the way markets have rallied. It seems that they are overstretched for the time being, right? So let's start the video. First of all, in terms of trend, we can clearly see that the trend is up in the daily and in the weekly time frame charts without any doubt. But we can also see that we do have once again a negative divergence in the Nifty spot. We can see a higher high and we can see a lower high in the RSI. Well, now does it mean that we are at the top or this is a topping formation? As of now, it doesn't seem so. But if market starts cracking down, then the immediate support, according to me, would be this extreme short-term support will be anywhere between 21,600 to 21,500. This 100 points band in the hourly time frame charts will act as a decent support. And the next support will be somewhere around 20,900 levels. 20,900, and you can also say that somewhere around at 21,000. So 21,000 till 20,900, this will also be an important support for the markets. But we can clearly see one thing, that prices are way away from the moving averages. Even the RSI is at 76. So it is very clear that there is no top out formation, but yes, Nifty is way too overstretched. Now we need to understand one thing, that the majority of the money was being made in this rally. Currently, there is no top out formation, but still we are overstretched. And sometimes I have seen that just because we are overstretched, and you saw this 300 points crack in Nifty and then there was a pullback. What if suddenly in next few days we have a sudden crack and then next leg of rally comes up? So we need to understand that if you are holding trades from a lower level, then yes, it is wise to hold them with a trailing stop loss and continue to ride the trend. But initiating too many trades at a very high price is risky. So yes, you can initiate trades, but you'll have to be very choosy about your sectors. And within those sectors, you need to be very precise which stock you're going to pick. All right. Bank Nifty. Now, Bank Nifty, we can see that the trend is up for sure. But again, we can see that we have a small negative divergence shaping up over here. In the daily time frame charts, we can see this high and we can see this high, but the RSI is forming a lower high. Is this negative divergence a very powerful one? According to me, no. It is not a very negative, not a very powerful negative divergence. But in the weekly time frame charts, we can see a powerful sign that the trend will continue to remain up, but the velocity with which the prices are going up might reduce. We have a higher high in price and we have a lower high in RSI. So this is just a sign that the trend might continue on the upside, but the velocity with which prices were rallying will come down. All right. So you can expect the uptrend to continue, but the uptrend will be slow. The momentum will not be swift as it was over here in the month of early part of December. PSU Banks. PSU Banks, we can see that the trend is up, no complaint whatsoever. We needed some more consolidation over here, but at times in a bull run, consolidations end much earlier than they should, and the rally continues. Well, as of now, there is one stock which I have been able to notice, which I want to share with all of you, is Union Bank of India. And the interesting part, what I can see, is in the hourly time frame charts. In the hourly time frame charts, this stock has been able to, bounce back from this 168.10% extension, and currently it is consolidating. So if we have a breakout in the hourly time frame charts or maybe lower time frames, then we'll be able to see some sort of momentum continuing on the upside. Private banking pack. In private banking pack, the trend continues to continue up. You can see this particular support of 24,250 has been able to support the private banking pack, and the bounce back continues. Currently, I have two stocks in my vicinity. One is ICICI Bank and the second one is Axis Bank. Both these stocks as of now, they are very, very lackluster in the daily time frame charts. But if they show any sort of breakout in the hourly or a lower time frame charts, then some sort of momentum on the upside will be possible for swing traders. Energy pack. Well, energy pack is clearly showing signs that the trend is up. The momentum is even stronger and the weekly RSI is at 85.75, almost close to 86. And if I convert this daily time frame chart into a line chart, we can see that we have a sort of higher highs in price and lower highs in RSI. So we have a triple negative divergence, a very clear sign that we don't know when this will happen, but it will come to a point that some sort of consolidation or profit booking will be seen. Exactly when will it happen, we don't know. So if you're holding stocks from lower levels, stocks like HPCL, BPCL or IOC, all these stocks which have rallied insanely, you should continue to hold them with trailing stop losses, but initiating new trades at this juncture could be risky. Metal pack, we can see that the trend is up in the weekly time frame chart. The trend is also up in the daily time frame charts, but we do have a sign that higher high in price, lower high in RSI, a sign that in coming days, the trend will remain up, but we'll have some slowdown in the rally. Although within all the stocks of metal pack, I can see one stock which has just started rallying right now. So you can keep a watch on this particular stock. This is not a time to buy, but you will see some fireworks in the stock coming up in the next few weeks if it manages to surpass this level of 768, 770 on closing basis. Autopack. Autopack, it seems that recent rally in Autopack was pretty nice for the swing traders. As of now, there are no new stocks visible to me which are looking extremely attractive. But one stock which didn't perform in extreme short term was Maruti. In fact, it underperformed. And what I can see as of now is this particular bottom which has been formed with the doji. Just few days back, we had a free trade sort of thing over here. And we have a big green candle. Again, we have a dragonfly doji. Generally, dragonfly dojis forming at a good support level is a very good sign. And if we have a breakout in the daily time frame charts, then we could understand that Maruti as a stock looks very good for positional breakout traders. FMCG, finance pack. In finance pack, we can see that the trend is up, but the prices are consolidating and it seems that it can continue for a few more days. The trend will stay up, but some sort of consolidation can continue. Consumption pack. Consumption pack, the trend is very, very strong, I guess. And the rally is supposed to continue up. The next level where the consumption pack will hit is possibly 9677 in the weekly time frame charts. FMCG sector. In FMCG sector, what I can say, the trend is looking really superb. After consolidation, we have a pretty nice rally. One of the stocks which I shared with all of you, I think maybe a 1 week back or maybe a couple of weeks back, was Hindustan Unilever. Or somewhere over here, I could clearly remember that the stock was trying to bounce from a very good support. And then we saw a breakout and the trend still continues to remain on the upside in Hindustan Unilever. Probably a good time to book partial profits or even a little bit more profits. ITC. ITC I had shared probably in my last weekly sectoral analysis. The uptrend has started. Yes, this is a negative candle, but once we are able to close above 464 or 470, then the uptrend will continue on the upside. INFRA. In INFRA, we can say that the trend is up, but we do have a sign of higher high in price, lower high in RSI. So a clear sign that possibly that the momentum will slow down on the upside, but the trend will continue. And we are also coming near to a resistance point. So let us wait for a few days and let us understand how things are going to pan out over here. Okay. But if you remember, I had shared one stock with all of you, which has been able to perform pretty nicely, and it has been Bharti Airtel. And you can see there is a swift breakout in the Bharti Airtel, which has been successful. ITPAC, I guess the trend continues to be on the upside in the weekly time frame charts. In the daily time frame charts also the trend is up, but we need some serious consolidation now in the ITPAC before some up move happens. Pharma pack, the trend continues to remain on the upside and prices can continue to trend on the upside. PSE sector, I guess I don't need to mention, the trend is very, very strong. The momentum is also strong, but the weekly RSI is at 87. In the daily time frame charts, we can clearly see a higher high in price, lower high in RSI. And this is a sign that we need to be careful in your long positions. If you're holding from lower levels, you can continue to hold them with a trailing stop loss, but initiating new trade at this juncture can be risky. Realty pack, again, same thing, just like PSE sector. You can see that the weekly RSI is pretty much overstretched. Even the prices are overstretched near a resistance point. Prices are forming a higher high and RSI is forming a lower high. And this is a clear sign that the momentum is waning, and in coming days, you need to be a little bit more careful and continue holding your long positions with trailing stop losses. Initiating new trade as this juncture will not result in a very big profit because the risk reward ratio is not favorable in the PSE and in the real estate sector as of now. I mean, if you're initiating new trades as of now. Mid-cap pack, you can see trend continuing on the upside. Again, the trend is up even in the daily time frame chart. Again, multiple readings in many sectors where prices are making higher high and RSI is making a lower high. So again, this is a sign that the momentum is waning. Trend may continue on the upside, but the velocity with which we saw this momentum earlier will slow down. So not a very good time to go long with new positions, but holding old positions is okay with a trailing stop loss. So I guess summing it up all, we need to be understanding that the trend is up in many sectors, but the Nifty, many sectoral indices are way too overstretched. And even if you find new stocks, new sectors where you can park your money, you need to be very careful and your position sizing should be perfect. Because now is the time for at least next 2 weeks, it's the time to save money which you have been able to make in this rally. All right. So I guess once again, I would say all the best and Happy New Year in advance. And I hope that your next year will bring even more profits in your trading account. Trade well, stay safe, guys.